Hello everybody, quick update on the S&P 500. I have drawn a Gann fan on this for the S&P 500, and I'm basically measuring here what is the most natural correction or even continuation of the bull market based on the Mr. Gann, because based on his theory, as the most natural correction is for 0.5 of the bull. So basically I've measured 0.5 of the April-May bull, and that's this line over here. That's 6,972. And it's also supposed to happen based on his theory in around half of the time that it took us to pump. And that is, of course, this line right here. So that's the start of July. So, of course, we are a way behind. I'm also going to talk a little bit about that and about my previous calls that I've made a couple of weeks ago. It does not surprise me that the markets are playing like they are. I have been telling you we're gonna go back to the all-time highs, even make the new all-time highs. That did not happen for the S&P 500 index, but it did happen for the futures, S&P 500 futures. I will very briefly switch the chart. I can't mess up my settings here, so I can't switch, but what you can see, I can, because I have it locked. I have locked the price to bar ratio. That's the only way you can draw this Gann fan. You have to square up your chart. But what I want to show you here, this is the S&P 500 futures, and on 15th of June we did make the new all-time highs. We did overtake the May-June top here. I did not even realize this actually only a couple of weeks ago. So let me go back to my Gann fan. So the most natural area where we should be spending, or the most natural after this parabolic move, okay? The most natural how the S&P 500 should spend its time should be actually around all around this line. This is the 45 degree angle from the top, intersecting this point, which is supposed to be like the most natural point where we should come. So we're never gonna come back to that point because we're past that time. Okay, so there is something not natural. So either this bull run was not natural, or this price action that is following this bull run is not natural. And actually the first mentioned, in my opinion, my humble opinion, that's what's not natural, because also historically, if you dig into the statistics, if you dig into the data, S&P 500 has like 100 years history or so, and all throughout the history of the index, we've never ever recovered, because this was almost a 10% correction, 9.6% or so in Q1, and we've recovered from that in 14 days, right? And we went into the new all-time highs on like 16th of April, so that's like 14 trading days or around. So we've never ever done that. And also I suspect who is pulling the strings, because we had the biggest from the Elon Musk, the biggest IPO in the history, and surprise, surprise, just leading to that IPO, that was the biggest recovery of the markets ever in that perspective. So there are signs, there are a couple of signs of what's going actually on. But anyway, so I believe this was not natural. So also these measurements are, I think, just they could not have happened. Let me delete this. Let me also delete these lines. But perhaps I could still leave this line right here, because this is still important. 0.5 level of the bull run, I think this is kind of like a magnet. So I could actually draw here a magnet. So I believe this magnet, this line, is going to be attracting us. Now I want to show you another study. So I have now unlocked my chart again, and I'm going to turn on my FOMC study. So this is basically the dates of the previous FOMC meetings. And as you can see, quite many times there were drops after the FOMC meeting, okay? However, there were also, the market was kind of rallying into the FOMC meeting, okay? You can see it so many times, and sometimes the top was quite important. So like the January 2026, I was actually the top of the market. That was exactly the FOMC meeting, okay? And we do not see rallying today into the FOMC. I have to say, I am very surprised. I was very surprised with yesterday. The fact that we actually were weak the whole day. I do think, or I did think, we are going to make a new all-time highs on the index, but that is now looking like I'm going to be wrong about that. However, I was right that it was going to happen somewhere in the S&P 500, meaning, well, it did happen in the futures. And as you can see, the index right in this spot did not make the new all-time highs, and this is where the futures made the new all-time highs. But anyway, we do have the FOMC, and we seem to be going a little bit weak into it. So my best guess would be that we are actually going to be stronger coming out of the FOMC meeting. So probably Warsh is going to say something that is going to cause a temporary bounce. So I'm looking for a temporary bounce here, but after this week, I believe the window for August and September, it's very, I think, strong, that sometime in August and September, so which is this quarter, we are going to end up around this line, around this magnet level. So 6,972. So how much of a correction would that actually be if that happens? That would be 8.5% correction, so not even 10%, which I was calling that is going to be least. But who knows, right? I don't have to be correct with the 10% estimate. I also want to, let me turn off this FOMC study. And the last thing I want to say, I'm going to switch to the daily time frame. I want to show you, by the way, I am still short couple of things. I'm trying to come back to the shorting of Intel and Korea. I have closed those way too soon. But what I am short is MAGS. I am short from this part right here. And I am short Apple. I am a little bit underwater, but keeping my hopes high still. CrowdStrike, I'm also short, and also some healthcare, ANRO, and there I'm also underwater. So this is technically still, even you could actually if you want, but it's not investment advice. Do your own research, of course. But in case you decide, you can get better entry than I did. And other than that, I just keep like big majority of my portfolio in cash right now. And I'm really regretting to be out of the hardware shorts because I've closed them. I was one of the best guys on the internet. Well, maybe not on the internet, but I was one of the best guys out there to be shorting the hardware from the top. I did, as I didn't see anybody else doing that, but I publicly announced I'm shorting Korea since 210, and then it went for 1 or 2 days only higher, and that was basically the top, the double top. Intel, something similar story, although I think I started shorting even from higher price. But what I also want to mention at the end of this video, that the hardware has been correcting severely. Like this is all hardware that I'm gonna be showing all of these charts. This is all hardware, okay? And as you can see, this is already kind of violent correct. Oh, wait a second, maybe not Dell. I'm going to have a look. I'm going to think about Dell, but again, the stock costs $416, which means that the put options are going to cost, the contract will cost like several thousands each, and and that's where the size of your portfolio comes into play. But what I want to show you as my closing thought, that all of these charts except for Dell maybe, and still AMD, still, oh my god, AMD rallied all the way almost to the all-time high just 3 days ago. I didn't even now when I'm switching through this chart. There is so many charts. I can't, like, I wasn't checking each of them every day. And Dell and AMD were shortable just a few days ago, and Dell still could be shortable today. It's going to open, however, lower than it was yesterday, but you can still get QRR. I'm going to have a look at it. But my closing thought finally is that what I can see, there is it's quite big correction already. Like Micron is going to open down 32% from the all-time highs. Bloom Energy 47% all, and you see this trade. This is my closing thought. Of course, I don't know if I'm going to be right about the Q4. I do believe there's going to be big recovery in the technology in Q4 this year, around the Anthropic IPO. But nowhere, of course, it's not going to be nowhere near as big rally perhaps as we had in April and May, but still. And I think that many of these hardwares, and including the last two mentions, MU and Blooming Energy, they are coming into the long trade area for me. Also, this could also be another level actually, if it's gonna go to 140. But I think 167 is already, and it's almost there. It's already, I think, in longable. And as you can see, I have QRR and 86% possible profit for the Bloom Energy. For Micron, 70% possible profit. Micron is still a little bit off, but I think this is gonna be hit. I do believe this is gonna be hit. It's 670, and that's, I think, where it really starts being interesting. Also, when you look at the bigger picture, I'm going to now disable all my drawings. When you look at the bigger picture, maybe hide all. This is on weekly. This is quite like parabolic. And let me also check. And there has not been yet weekly divergence. This is another case for me, guys. This is another case why I believe that there is going to be a big recovery in hardware, followed by even bigger crash than we already are having. And that even bigger crash probably coming the next year. So, because when you look at Micron, when you look at Bloom Energy, question mark. Oh, okay, that did have a divergence on weekly, but Micron did not. No, MACD peaked at the same week than the price peaked, and there is probably others like Micron, probably SanDisk. There is one 1 week divergence, but that's not really that much. So my closing thought: there is going to be a big recovery. There is going to be a big recovery. We are going to make a double top for Micron. Hopefully, I would hope for higher high even for price, so that we can see a very, 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 very clear weekly divergence, or probably even monthly then divergence. Yeah. And after that, we can have another shorting opportunity, but it's the longing of the hardware that is going to be next, the opportunity.